I was wondering if we start with the economy or just with property, but why don't we start with property, because that seems to be really the core and the gist of what's going on here. Of all the things I imagine Beijing might look to ring fence, it's really property, because that takes you into things like social unrest and all those things. On that premise alone, can I just sleep well at night that things are going to be okay?
Well, that's an interesting question. I mean, the big fear among investors is that China is going to go through this long period of stagnation, similar to what occurred in Japan. And I would argue that they're probably able to sidestep that. What they've done is they've engineered a drop in the property market, quite strict. They started this last fall with the 3 red lines policy, and they've stuck to it pretty closely. But the interesting thing is how they're handling this. Of course, they tightened credit, but they've also forced a lot of the local governments to take up the mantle of trying to deal with the stress and pain of a slowing property market. So a lot of these local governments are scrambling to figure out how to get these projects continue to be built while also suffering through lower credit conditions. And that tug of war between the developers and the local governments, with Beijing sort of with its hand on top of the whole thing, pushing downwards, is a fascinating situation. But because it's a state-run economy, they have a lot more control over the way capital is allocated than Japan did.
Okay, and yeah, I think a good example, not so much Japan, which I want to get back to in just a couple of minutes, was yesterday in the news out of Chengdu, which was the first major city to come out quite directly in support of giving developers a little bit more support. Talk to us about whether this means more financing and just local government finances, well, raising more local bonds is what I'm trying to get to here, to help plug this funding gap.
That was an interesting situation in Chengdu. It was not clear from the reports where the money was actually coming from. They talked about the banks, but does that mean it's state-owned banks from Beijing? Because that's basically an implicit obligation of the central government. Are they talking about local banks? Are they talking about private sources of capital or bonds? There's different ways of funding this, and the whole point is Beijing is desperately trying to say, okay, this is not our problem. This is your problem. This is the problem of local governments, local developers, and individuals. So they're going to try to avoid getting the state banks involved. So that was an interesting story, but we don't know how relaxed that capital will be and where it's coming from.
Okay, and that takes us into what, well, you and I, we know what this means, and I'm not sure, though, for our viewers what this means. Window guidance from the PBOC to the banks. In simple English, for our viewers, what does that mean?
Well, everybody talks about macro policy and monetary policy, in which in the States means you relax interest rates and there's more capital for everybody. In China, it's a lot of conversations between the central bank and the banks and their branches or the headquarters in Beijing. So they could sit down with the heads of 4 banks, and that's half the banking system, and tell them, look, if you get a stressful situation in one of your banks in the provinces, give them a bit more money. But it's up to you to try to figure out how to negotiate all that. So that's what I mean by window guidance. So monetary policy is not very clear in China, and only later do we find out where the money has been lent. But they are definitely doing that. We just don't know how much money is going out the door.
Okay, and how do you think the story plays out in 2022?
Well, there's going to be a lot of defaults. Kaiser's in deep trouble. Evergrande is near default. And there's going to be some smaller developers that we don't even hear about because they're not listed who are going to default. And the market will have fewer players, and hopefully there will be a modest decline in overall activity in the property market so they can start popping the bubble. And then at that point, the real question is what happens to can they reallocate capital to new growth areas? And that's a scary part because China's not so good at giving money to small business, but that's what they really need to do. And there's now talk about pushing that and local governments being encouraged to lend to small business because that's where the economic growth is, that's where the efficiency is, and that's where the employment is.